Here with us now are brothers John and Pete Najarian, co-founders of Market Rebellion. Gentlemen, welcome. So what should we make of the sell-off today? Are investors getting more pessimistic about where the economy is headed? Who wants to go first?
I'll jump in. I think it wasn't nearly as much about the PCE or the inflation data as it was about the tariffs. Tariffs are a bit of an uncertainty, of course, going forward. Mary Barra said that, the CEO over at General Motors. And I think most of us believe that she is 100% correct. I will point out, though, that when the market more or less bottomed on March 10th of this year, and we were at peak risk at that point, the VIX, which is a measure of uncertainty in the markets, was significantly higher, like 25, 30% higher than where it is now. So the market seems to be getting used to it, even though, of course, investors don't like it.
Well, Pete, we know markets typically anticipate this kind of movement, but inflation is still pretty sticky. That's before the majority of Trump's tariffs take effect next week. What are you expecting to happen after April 2nd, or Liberation Day, as the president calls it?
Yeah, Liberation Day, I think we're going to see it be very volatile, because this is something that, as we know, going into this whole thing, I think that today the PCE, to John, I totally agree with everything he was just talking about. I would say that as far as what we're looking at into the future, it's still about tariffs. Now, are they a one-off? I kind of in that camp that it is a one-off. But at the same time, that one-off is going to occur on April 2nd. And that's when everybody's going to probably see the markets kind of moving around significantly, to John's point. And by the way, it took 2 weeks for the VIX to go from 17 to 29, another 2 weeks to go from 29 down to 17. It's only taken 4 days for it to go from 17 again back up towards 22. So we are sort of setting ourselves up right now for, I think, a little more volatility is going to come into the market come next week.
John, the Wall Street Journal editorial board not a fan of these tariffs. They say car makers have already invested countless billions in efficient supply chains to make cars that middle-class Americans can afford. They will now have to spend hundreds of billions more, and all because Mr. Trump has an economic development model based on the fantasy of, quote, import substitution. That model kept India poor for decades. Do they have it right, or are you expecting all that investment to spur more growth in our country?
I think it will spur manufacturing growth in this country. We found out during COVID how much of the very important things that we need on a daily basis are made overseas, in China and elsewhere. I think it's important that we have a resurgence of the manufacturing sector here in this country. And obviously, there are winners and losers when we talk about tariffs. Some of the winners are steel stocks, which are up 25, 30% since the president started talking about this. The losers, as you've described, Hannah, accurately, are car manufacturers. That's a big ticket item, and there's a lot of steel and construction or putting together of the vehicle just across into Canada or Mexico. I think that when you look also at precious metals, my gosh, the gold miners are exploding to the upside because of people seeking a little more stability, and they're going for those precious metals in a big way.
I've heard that more and more when we talk about gold prices. John, very quickly, though, how long will it take for us to see these benefits?
It might take a little while. Go ahead, John.
Sorry, Pete.
Go ahead.
No, go ahead, Pete.
John, Pete, go ahead.
I think there's a time frame that certainly is collapsing very rapidly. I think we're going to start seeing what these things are going to be doing. And I'll tell you what, it will take a little bit of time, but I think the president laid this out very much so when he was running the inauguration. He talked about it again, and here we are in the midst of this thing. So it's going to be something I find to be very, very interesting, and I think there will create all kinds of opportunities. To John's point, we've already seen what gold and silver have done. We've seen what steel has done. We're looking at copper, which is also another one that's had a really nice run to the upside. So there's a volatility in the market, but there are still some stocks and some areas in the market that are certainly moving to the upside.
A lot of CEOs seem to be changing their minds about the president's policies. The CEOs of Ford, GM, not a surprise there. We know that.
Of course.
But yes, absolutely. But BlackRock, JP Morgan Chase, what kind of conversations are going on behind the scenes here? John, I'll let you take that.
All right. I think the conversations are that the president is more focused on jobs, U.S. jobs, than he is focused on the stock market. Many thought that he would be so focused like a laser on the stock market. He doesn't seem to be, And he seems to have a rather thick skin when it comes to looking at how the market perceives his tariffs and the
Sure.
desire to get these jobs back here. So that's what I'd throw out to you, Hannah.
It's really a pleasure meeting you guys, talking to both of you. We hope you come back. John and Pete, Najarian, thank you.
Thank you.
Thank you.